Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Thursday, January 22nd, 2008. Well, today was a fun day, guys, and I'll explain why. We had a little of everything today. We had a channel formation today in the early morning hours and throughout lunch, and we had a breakout in the late afternoon, giving a great opportunity to buy some stocks. And we made full use of that in the chat room today, picking up some odds and ends that had been beaten down and overly beaten down, as we did know that based on yesterday's reversal, and this was all called in the video, as we did know that this market was due for a rally and a bounce, and a technical bounce at that. So let's get right into the charts here. I want to go over some odds and ends today and touch base with everything. This is the daily chart of the Nasdaq, and yesterday we had that monster reversal after we were actually lower than the low. And this double test here, or what's called a tweezer or a fork here, is a very bullish situation each time when it closes near the highs. And here we got that close on the high, and the following day, which was yesterday, we also got a close even higher after being lower. And that's a very bullish signal, indicating to us that we talked about in the video yesterday to expect this bounce. The markets did not disappoint us, and up we went today, closing up on the Nasdaq 44 points. The Dow closed up 108, while the S&P closed up 13.5 points. Now let's look at the intraday chart on the ES futures here. And we're going to flip over to that here, and there we go. And you can see that throughout the day on the ES, by the way, was the weaker index today. And that is primarily due to the technology sector having more great earnings yesterday after the bell and being the leader today. In addition, the technology sector was much more beaten down. So let's talk a little bit about the ES intraday, and then we'll look at the Nasdaq. For the most part, you can see that the market stayed in a tight range today, up until this point here, and actually most of the day. But we'll just look at this first. Number one, look at the channel. Channel almost all day on the ES until the late afternoon, at which point you got a breakout over that channel right here, a pullback to the double moving average point. And notice that, folks, you have a little necktie right here where you have the 50 and the 20 moving average coinciding. That's a ton of support in the markets if you're looking intraday for a move higher. You bounce off that and rally right into the close. All right. Now, interestingly enough, we had some nice earnings after the bell, and we'll go over that in a little while. Now, let's look at the Nasdaq intraday, because this is really where you're going to see a few more odds and ends. What you're going to see here is during the day, the Nasdaq also traded in a tight range. And we're going to draw that in right here. But nicely enough here, what you can see is later in the day, again, you had that break up, little pullback, and then again a move back higher. Now, you can see on the daily chart of the Nasdaq, as we pointed out, we've started this move up. Anytime you have a drastic move down like this in a market, you're going to have an elastic rebound effect. And it's just a technical bounce based on oversold natures in the market. Stochastics were dead low, MACDs were on the bottom. You're going to have an automatic bounce back, and it's much like a rubber band. You stretch that rubber band far enough, it's going to break and snap back. Now, the snapback maybe doesn't go as close as back to the upper part of the area, but it's a normal effect bounce back. And that's what you're seeing here happening. Now, in a bear market, which we appear to be in, you can't expect the bounces to last long. So while we did call for this bounce yesterday on the reversal in trend, and we had been calling for the bounce coming over the last few days, you have to be careful here. You can't just go willy-nilly and just, at least I can't go willy-nilly and just throw all my money back in the market, because there's nothing to say that there won't be a major issue coming out over the next few days. Now, that is to say that I do expect a rally to continue here, but after tomorrow or midday tomorrow, and I do think I will go out on a limb here and expect a gap up based on the earnings here again tomorrow, but you have to be careful, all right? And again, bear markets are notorious for having strong bounces, but bounces that are very quick and fail quickly. So be aware of that. So in many cases, maybe we see this point here on a rally. Maybe we see this point here on a rally with the 20 moving average. It's very likely that we come to this point at some point. That would be a little bit of a drastic move, but very possible. So as you can see, there's a lot of potential for more of a bounce, but I really want to stress that there are key levels here that we need to watch. And the first sign that one of these starts to fail, you have to move out, or at least I'll be moving out fully of the market to be back in cash and be on the safe side, if not picking up a little QID, maybe in the $45 to $46 range should we get there. And again, you always start small, or I always start small with my positions, because you never know if you're picking the exact lows or the exact tops when you're shorting and so forth. Alright, now a couple things I want to go over here on the SPY chart. And let's take a look at the SPY here. You had this massive fall, and on the SPY you had that little sideways trading. This is notoriously a bearish pattern, and that next fall down, you had the same type of tweezer effect right here, where you had this move up, closing at the high, another move down, closing at the high, and then the continued rally today. Alright, in tune with that, you do have a potential to move more up to the upside, but I do not think this is the end of it, folks, and I do want to stress that. A lot of people out there are calling for the bottom already. They're saying everything's good. Well, going back in history here, and let's flash back a couple months, even before August, we were calling for a drop back to March lows. Then once August happened, and we bounced off of the August lows back to the October highs, we called for a retest of the August lows in the videos, and also a retest of the March lows. Since then, we have done both, and we bottomed out right around that March low back from '07, if not a little lower, and that's when we're getting this bounce back up. So it's very key to remember, folks, bear markets don't end this quickly. The issues in this market are not all the way gone. Now, that doesn't mean you can't take advantage of the bounces, and we fully took advantage in the Intraday Stock Chat today. Actually, I shouldn't say fully, because there were tons of stocks bouncing, but we definitely took advantage of it, and I'll show you a couple of those plays today that we were looking at in the chat room, expecting them to go over the last couple days, and they sure went well today. Alright, so again, keep an eye on these moving averages. If it does happen to get up to these moving averages, this is where I'd look to go short or move out from your plays, as that it will be significant resistance when we get to those moving averages and touch them again, should we get there. But again, don't think that in this market we couldn't gap up tomorrow or move down tomorrow at some point. It's very likely that you see a hard push either tomorrow or even on Monday, and we'll touch on that in a minute, and then midday you could reverse and just start sinking again hard and fast. So just as I always say, follow the indicators, follow the technicals, and you'll be safe. And always play safe. The more conservative you are, in general in a bear market, that's the safest way to be. Alright, now let's talk about a little about tomorrow. Right now you have Microsoft reporting stellar numbers, and Microsoft is trading up very nicely, and I'll show you the level 2 here so we can all get a sense of that. Alright, and here's Microsoft, the level 2 on Microsoft. So you can see that Microsoft was up $1.32 today. After hours, it's up another $1.75 almost trading as high as 35. That was a big one for this market to get through, and it did get through, and the futures are rallying in response. You also had a couple other plays report earnings today, which I'm not going to go into because they're not as big as Microsoft, but nonetheless, it was very powerful. Now let's talk a little bit about what was going on in the chat room today. This morning was dead, and when I say dead, we sat there watching the futures tick up 2 points, tick down 2 points, tick up 3 points, tick down 3 points. But then the afternoon came and the market started to uptick. Not only that, but we saw solar stocks, which is one we always follow because they were past runners, upticking huge. And sure enough, the entry on the buy in the chat room was at $8 on AKNS. Excuse me, at $7 on AKNS right here, and I'll draw that line right over. So at $7 on AKNS right over here, and this is right in the afternoon. You can see about 1:32 o'clock. We went long AKNS, and look at the meteoric rise it had. It had a boom, pull back to the 200 moving intraday average, and a blast off to the effect to the upside. Great play. All solars ran insanely well. This stock is up again after hours here, trading at $8.40. And again, the entry there was at $7. Just a tremendous play there. And all solars ran. You can see First Solar. Same type of thing. This thing was down huge this morning, or big this morning. And look at this rally back up. Let's think about a few others. You got ASTI, another play that was up all day today, up $1.28. You have, let's see, YGE, Yingli Green Energy, up $1.58 today. I can go on and on, but look at these charts. Whenever you have a chart that looks like this, folks, after it had been one of the monster plays, and I will show you CSUN, China Sunergy, another play that was talked about today in the chat. Whenever you have a stock going to new highs like this, where it's up near $18, $19, and it pulls back within a matter of 2 weeks to $9 or $8, you know you're going to have a bounce back elasticity blast off, and that's exactly what we had today. And this is what I preach about in the markets. It's pure technical analysis, folks. When you have the stochastics come down this hard and this fast, based on no news, and the key here again is that oil was coming down, the markets were coming down, these things got overly punished, and you always want to go against the crowd. Two days ago, 3 days ago, when everyone was hating on these stocks, saying how oil was going to go to 60, blah, 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 that's when you want to step up and say, I'm going against the crowd. Everyone else hates it. It's getting unfairly punished. I'm going to take a shot. Now, the key here, guys, is you have to do that in the right sense. If the stock just reported that they're going out of business, well, obviously it's going to tank. And you can't step up there and say, well, everyone hates it. Well, obviously everyone hates it. It's going out of business. But when a stock has no real news to it, meaning that it's just getting punished because of market conditions and various panic sellers, that's when you need to be patient, start accumulating down here, right down here in the $8 level, and before you know it, now it's back to $9.62, and it's even up after hours. It's $9.75 by $9.90 after hours. And again, SOLF is another play, and you can see the charts here. The charts here are just overly sold out, and they should bounce, and this is beautifully off that moving average right here, and it should bounce. Hopefully it bounces, and again, you always keep a tight stop, as I always preach stops. Have a wonderful day, guys. Watch for another gap up tomorrow on earnings. Take care.